My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/BestStockStrategy. The Wealth and Health Podcast is brought to you by BestStockStrategy.com. Your most important goal when trading. David Jaffe with BestStockStrategy.com. In this video, you're going to learn the most important goal when trading, and keeping this most important goal in mind has saved me from a lot of stress and also a lot of time and effort to manage and roll positions. So by far, your most important goal is to mitigate risk. It is definitely possible when selling options for you to win 95 to 98% of your trades and still lose money. And the reason for that is you can suffer losses and literally wipe out 1 to 2 years of trading profits if you end up trading too large. Every single trade that I make, I always try to think of the worst case scenario. What happens if I'm wrong? How am I going to end up defending this trade? I think it's very important to always have an exit plan and to not get overconfident, even if you end up winning 30 straight trades or 50 straight trades, or 1 month you end up making about 4 to 5%. I think it's really important to not start getting more aggressive and trading more contracts or trading more aggressive strike prices or things of that nature. You should always focus on the long term and always focus on minimizing risk. So quickly, as an example, let's say your position ends up getting challenged. You should manage and roll that position early. And instead of rolling it to the same strike and trying to collect as much money as possible, instead, you're way better off rolling that position out in time, collecting premium, and then allocating that premium to reduce the strike price. So that way, that position will end up showing you a profit eventually. For example, from a mathematical perspective, it doesn't really make sense for you to collect an incremental $500 per contract when you can roll down the strike price by $20. So for example, let's say you're short a 160 put on Alibaba and you wanted to roll that position forward by 2 months. You can either roll forward that position by 2 months and pick up an incremental $500 and still sell the 160 put, or you can allocate that $500 and reduce the strike all the way down to 150. So in essence, by collecting that $500 and keeping it, you are reducing your break-even point on that option to about 155, less the original premium that you received. But if you roll it to 150, then you're reducing your basis down by an incremental $5. So in essence, you're picking up an incremental $500 that you would not have been able to pick up had you simply pocketed the premium and kept the strike price the same. So things like that are really important. You always have to make sure that you reduce and minimize your risk, and you always try to avoid large losses. And I think it's really important to maintain and keep a long-term perspective when investing, and really when doing anything. When investing in yourself, by going to the gym, by eating healthy, things of that nature are very important for your own ability to maximize your earnings. David Jaffe with BestStockStrategy.com. Please like, comment, share, and subscribe. Click the little bell notification so that way you receive an alert when I post a new video. And remember to always keep this in the back of your mind and to make sure that you avoid and respect the market so that you do not incur large losses.
Visit BestStockStrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and review. If you have any questions, visit BestStockStrategy.com and send me a message.